All right, welcome to The Explainer. Today we're talking about something huge, how to actually make money in the stock market. I know, there's so much noise out there, so much conflicting advice. We're going to cut through all of that. We're diving into a system that's not based on opinions, but on over 100 years of hard data about what really works.
So, let's just get right to it. Why is it so incredibly hard for most of us to win in the market? You know the feeling, right? You finally pull the trigger and buy a stock, and it immediately drops. Then you sell it, and bam, it skyrockets. It can seriously feel like the market has a personal vendetta against you.
Well, here's the thing. According to the legendary investor William O'Neill, the problem is that most of us, we're playing by the wrong rule book. We're all taught the same old mantra, right? Buy low, sell high. Go look for those cheap bargain bin stocks with a low price-to-earnings ratio. But O'Neill's research, which looked at over a century of the biggest stock market winners, found something shocking. The opposite was often true. The stocks that made people fortunes, they weren't the cheap ones. They were market leaders that already looked kind of expensive. And they all had one thing in common: absolutely explosive earnings growth.
And this quote right here, it just nails it. This is what O'Neill called the great paradox of the stock market. It's a total mind-bender, right? It forces you to completely flip your thinking. You're not hunting for bargains anymore. You're hunting for strength.
Okay, so if the old rules don't work, what does? What are the new rules? Well, that's exactly what this is all about. This brings us to O'Neill's incredibly powerful formula, a system he developed for spotting these super stocks before they make those massive moves. And he boiled it all down to a simple, memorable acronym: CAN SLIM.
Now, the real power of this whole thing comes from where it's built on. This isn't just some guy's gut feeling or a hot tip. No way. O'Neill and his team did the hard work. They went all the way back to the 1880s and studied in detail over 1,000 of the greatest winning stocks in history. They weren't trying to theorize. They just asked one simple, powerful question. Forget what should have worked, what actually did work, over and over again.
And you know what they found? From that massive study, they were able to distill it all down to just 7 key characteristics. 7 things that all these super stocks had in common right before they went on those monster runs. And those 7 traits, well, that's what forms the CAN SLIM acronym. Think of it like a checklist, a data-driven toolkit for finding the next big winners.
All right, let's start breaking this down. First up, C stands for current quarterly earnings. And O'Neill's data on this was just crystal clear. You've got to see huge, explosive growth in a company's earnings per share. That's EPS. I'm not talking about 5 or 10%. Get this, 3 out of every 4 of the greatest stocks in history showed their earnings jumping by 70% or more in the quarter, right before the stock took off. So mediocre growth, it just doesn't cut it. You need to see fireworks.
Okay, let's jump to the L, and this stands for leader or laggard. And the rule here is simple. Forget the laggards. You want to buy the #1 stock in a strong industry, and the proof is in the numbers, specifically something called a relative strength, or RS rating. O'Neill discovered that the average winning stock had an RS rating of 87 before its massive price move. Just think about that. That means it was already outperforming 87% of every other stock in the market. It's simple, really. Leaders lead.
So, we've got the fundamental traits of what to buy, but just as important is when to buy. And this is where O'Neill uncovered another key piece of the puzzle. These winning stocks, they often trace out predictable chart patterns right before they make their big move.
The most famous of all of them is the cup with handle. It's basically a picture of a stock taking a healthy breather after a really strong run-up. The cup part is a period of consolidation, and that little handle is the final, slight pullback, just before the stock gets ready to launch higher. It's a classic signal that big institutions are quietly buying up shares.
But hold on, not every U-shape on a chart is a buy signal. There are specific rules. The stock has to have had a prior uptrend of at least 30%. The cup itself can't be too deep. The handle should drift downward on really light trading volume, and most importantly, the big buy signal happens when it breaks out from that handle on a massive surge in volume.
And here's the magic of using charts. These patterns aren't some new fad. The human emotions that drive the market, greed and fear, they never change. As O'Neill pointed out, these patterns are timeless. Learning to spot them gives you a huge advantage over the crowd.
Okay, we've talked about what to buy and when to buy it. But there is one rule that O'Neill considered more important than all the others combined. And it's not about making money, it's about not losing it.
And there it is. Incredibly simple, but so powerful. This is probably the single most important rule in the entire system. You have to, must,
Cut every single loss at 7 to 8% below what you paid for it. No second guessing, no hoping it comes back, no exceptions.
This is what O'Neill called rule number 1. Protect your capital at all costs. Look, you are going to be wrong on some of your stock picks. Everyone is. It's a guarantee. This one rule is what saves you from a small mistake turning into a catastrophic loss. It keeps you in the game so you can live to invest another day.
The legendary trader Bernard Baruch said it perfectly. You don't even have to be right half the time to make a fortune. If you have the discipline to cut your losses quickly when you're wrong, your big winners will more than pay for your small losers, but only if you actually keep those losers small.
So let's pull all of this together. At its core, the CanSlim system is more than just a list of rules. It's a whole philosophy. It's about learning to listen to the market instead of arguing with it. The market is the ultimate guide. It tells you the real story through price and volume. Our personal opinions, what we think a stock should do, are usually worthless. The goal is to get your ego out of the way and just align yourself with the hard facts the market is giving you.
And that really leads us to this final critical lesson. The absolute fastest way to lose your shirt in the stock market is to try and prove that you're right and the market is wrong. Humility, as it turns out, is one of an investor's greatest superpowers.
So as we wrap this up, I want to leave you with one final question to think about in your own investing. Are you listening to your own opinion, or are you listening to the market? That's the explainer.